Bald Hill.
Keen to talk about
Bald Hill.
A mysterious update. So the administrator said in this case that the identity of the bidder will remain confidential until closing, but they explicitly state that it's not the consortium made up of Glencore and Sagex. After hearing all of this, my question is, why would McGrath Nickel not run an auction process to get the most amount of value as possible? There's clearly plenty of people who are interested in buying the asset.
Whenever you see something like this, you always question, well, who leaked this and what was their intention? This is the beginning of the end. The tiny structures that enable you to be alive unravel. Like an egg, they can't be uncooked.
Right. When you have that urge to go closer to the mic, Trav, resist.
Don't do it.
Just don't do it.
Don't do it. I won't do it. I can't hear myself when
Trust me, you're getting hurt. Right, buddy boys, end of the week. Welcome to spring. JD, Trav, how are you, gentlemen?
Oh, I'm doing well. How are you?
I reckon you're looking sensational, if I may say so myself. Trav, have you not
mate.
washed your Money in Mine shirt? What the fuck?
I haven't. My washing's piled up, mate. I'm too busy working. So
I've got to get some more because I've got to rip the one every second day. I won't lie, I've doubled this one up.
Well, I was hoping to, even if I wasn't wearing the Money in Mine shirt, to be wearing my Hoodaroo hat. But then I keep remembering I sold it to Bryce Gower for $200.
Yes. Good resale. Right, boys, what do we got installed today for the end of the week?
We've got a good one. We've got we're going to touch on Fortescue.
The revolving door that keeps on giving.
Yeah. We've got a bit on Alita Resources, which people will remember as the owner of Bald Hill. And then what else have we got? You're going to do a bit of a dive on AuTECO.
AuTECO. They've purchased a copper gold project in Newfoundland, so we're going to get in
Up
the
in
weeds
Canada.
of that. Probably irrelevant weeds of underground mining, considering it is purely an exploration play, but we'll get into that.
Yeah,
excited,
we'll touch on our dear friends at Sayona. And then we've got a little segment on NexGen, the big developer of the Rook 1 uranium deposit in Canada.
Very good. Right, let's get into it. Partners today, our great friends, Terra Capital. Thanks to Dylan Kelly for the rare earths thing. That went absolutely off like a frog in a sock, that one. That was bloody sensational.
Yeah, if you haven't watched that one, go back and watch it. It was great. I learned plenty.
Oh, yeah. Well, we re-listened to it and obviously picked up on a lot of stuff that, because there's so much information to consume, and he'd done it so well. So it was really bloody good.
I think it's a must listen if you're considering dabbling in the rare earths, investor universe, because there's just so much noise, and very little signal. And I think Dylan does a great job of kind of articulating the pitfalls of what to look out for in that space.
Yeah, all the complexities in and around it, right?
And bloody speaking of beers at 1 o'clock, we are catching up with Anytime Exploration Services. Seamus Murphy, we're meeting the man in the flesh.
You just make the segues happen.
Can't wait to bloody suck down a swan draft for lunch. Anytime Exploration, anything, anywhere exploration. He's your man. So, boys, Let's get into it. Fortescue, you would define it as a tumultuous week.
You sure would. So last night, if people didn't see it, the CFO, Christine Morris, exited. That was only a few days after what we'd spoken about, Fiona Hick, the CEO, leaving. And then on the back of that, the share price down 6%. Granted, they did write down a bit of value relating to their Iron Bridge project as well. And on today's announcement, you've got the share price off another 5%. You've also got Guy DeBell, who had, after 5 months, stepped down as CFO of FFI, but he was still on the board. He has now left the company and joined Tivan. So the AFR have reported that Christine's tenure at the company was 2 months, and that she's now the 11th executive to leave within 3 years at the company.
Yeah. Mate, this is a story that's it just gets juicier, I think, by the hour almost. There's just something new that's popping up with Fortescue. There's so much coverage. The front page of the West today, not a favourable headline. There's some hilarious AFR articles out there comparing Twiggy to Al Pacino, and the photo comparison will flash up on the screen is something to witness. Like the AFR, they report the 11th executive to leave in 3 years. I think the number could actually be higher than that. Let's pull up Fortescue's 2021 annual report. This is a document, keep in mind, that came out just 2 years ago. Let's look at the executives on the page of that report that says executive team. So I'm using their definition of the word executive here. Executive team. And I think let's just take a look at them. There's 11 people on that slide. Let's see where they are now. So Elizabeth Gaines, she has left her executive position as CEO, but she's still on the board. I'm going to put a cross on her saying she's left the executive team. Ian Wells departed 31st of January this year for time with the family. Danny Goman left the director sales in August 2022 to become senior advisor to the CEO, a role which he departed within 6 months' time in February 2023. Derek Brown departed June 2022, and these days he finds himself working in MinRes's lithium business, which is interesting. Tim Langmead left in November 2021. Linda O'Farrell left December 2022. Her previous role as an executive there was director of Fortescue People, and very interestingly, she's now running her own organisational culture business. Fernando Pereira, he departed in April 2022. Like Derek Brown, also finds himself working in MinRes's lithium business these days. Alison Terry departed February 2022, now a NED on various boards, and Rob Watson left in December 2021, is now retired. So, yeah, I mean, like 9 of the 11, if you include Elizabeth Gaines, have left the executive team there. But let's just keep in mind that's not the only number, because there's people who've come in to fill these executive positions that have left in short notices as well. So you've got to throw in Fiona Hick, Christine Morris, Felicity Gooding, and Guy DeBell, who all came later and have since departed or announced their departure too. So in my numbers, that's 13, not 11, 13, if you include Elizabeth Gaines.
So you could go 12.
Yeah.
Elizabeth, that's a bit of a 50-50 one, I'd say. Yeah.
I think one of the differentiators, and I haven't looked into this, is that you had FFI and then FMG as previously separate entities, and some people had joined FFI. But regardless, it is a super high, level of executive turnover.
Yeah. Now, talk about a little presentation they put out as well, which I think come from they were presenting at a conference or
Perth Bow Forum, I think it was called.
Yeah. So, look, to be honest, I couldn't get past the 8th page because I was thinking, it's going to be like this the whole way. They took Flano's Delta to the next level. It was like just big, impactful, bold writing slides about the overall theme is that humidity is going to be the death of humanity. is what I took from it. It was very if they wanted impact, they got it. But look, I couldn't even get through it. I assume you guys flicked through the whole thing.
Yeah, I did, mate. And I want to read some slides because I think it's the only way to actually communicate what this presentation entailed. And when I read through them and when the money miners listen to it, we're also going to have some movie trailer music going along with it.
Is it something like a Christopher Nolan Inception Dark Knight sort of thing? It had that sort of feel to it.
It really did. All right. So are we ready? I'm going to rip through a couple of slides here. The fossil fuel industry admits global temperatures are rising, but there's something they're not telling you. ... Something else is rising much faster, and it's already killing people. Could your health already be at risk? Yes. Humanity is at risk. Now. Can you escape if you live in a city? Sure, until the air conditioning fails. You're young and work outdoors. Are you safe? You're at extreme risk. So are children, grandparents, and people who are already ill. Why? Lethal humidity. This time, there's no cure. I'm going to fast forward to another section, by the way, because it's quite funny. Another section later in the pack. Your heart rate accelerates. Pounding headache, vomiting. Your heart pumps up to 400%, more blood than normal. Within minutes to hours, your body temperature will rise to a very dangerous 41 degrees Celsius. This is the beginning of the end. The tiny structures that enable you to be alive unravel. Like an egg, they can't be uncooked. You bleed internally. Your blood thickens. Your organs start to fail. Hallucinations, seizures, coma. Heart attack can happen at any time. You struggle to breathe. If you've made it to hospital, you can have cardiopulmonary bypass. Your blood is drained, cooled, then put back in your body. Even if you get to a hospital, you're more likely to die than survive. If you don't make it to hospital, you die. I'll leave it at that.
That's look. I probably shouldn't be laughing because it is probably climate change and decarb is a real thing. But just questioning the delivery and the execution,
Yeah,
of how this was put across.
Well, the delivery was from me.
No, but that's effectively how everyone's interpreting it, the way you did it.
I'd echo your statements there, Matty. It's like a serious issue, and it's a sort of bizarre kind of means of translating that issue and conveying that issue.
Oh, well, it's got people talking, so if they wanted that as an outcome, it's worked. If you look at that from a marketing standpoint.
It's pretty bizarre. I haven't seen anything like it come out of a mining company before. It's doing the rounds on social media, and rightfully so, because it's just not the sort of presentation you expect to read, not the way of communicating an important message that you expect to see out of a $60-odd billion company either.
So they went down a little bit. I think they were down 5% or something. They go ex-dividend next week.
Yeah.
On Monday, don't they?
So I think of the psychology of the holder of this stock, who's maybe a bit attached to the franking credit. They go ex-dividend Monday.
Yep.
You saw it come off 5%. I think today it was 6%. The day the CEO left. It's a turbulent time. I had someone ask me the question today: Is Fortescue vulnerable for the first time in a long time? Just from a corporate activity perspective, are they vulnerable? I think the answer to this is still no. But there are some important points to discuss in relation to the dynamics of this company that are different for the first time in quite a while. And why the question around vulnerability? Well, the lack of continuity of executives at this company, the major shareholder influence is now effectively being diluted by 50%, given the personal separation there. I know they talk about still being aligned on decisions, and that's probably right. But I'm just putting forward the case of vulnerability. And then there's sort of the ramp up uncertainty with Iron Bridge. Will it meet expectations or not? All of that sort of adds to the line of thinking that Fortescue has heightened vulnerability relative to other periods of time. I still think that they're not vulnerable.
Yeah, I'd agree with you. I don't think that they're vulnerable given what you've outlined. The point on Iron Bridge is interesting though, because a lot of other executives, would have their head on the chopping block for a project of this scale that was over time and over budget and such. But I mean, it's not even the same executive team from when this went into, final investment decision through production to where we are now. So that's just not the case. And that was another reason the stock was down. It was the same day, in amongst the annual report that the write-down was announced. So it'd be interesting if you could break out what people were selling it down for. How much was it for the changes at the executive level, the write-down, and Iron Bridge not going as well as they'd hoped, But
seeing this many people leave very suddenly and on short durations just poses the question.
Yeah.
So something we'll never know the answer to.
Bold Hill, guys.
Bold Hill.
Keen to talk about
Bold Hill.
A mysterious update. So for those wondering what we're talking about, Bold Hill is one of the few producing lithium mines in the state. The owner is Alita Resources. So they actually went under in mid-2019. They were since delisted from the ASX, and they've still got a Singaporean listing, which has been in suspension for a long time now. So a couple of days ago, it came out that Glencore was actually bidding for Alita. So it came up in an article via The Australian, and that outlined that Glencore, along with Sagex Capital, would buy the debt of Alita and look to relist the company at a valuation of about $1.8 billion.
Can I ask a real dumb question that I don't know the answer to? Is Bald Hill breaking rock today?
Yes.
It'd be interesting to just talk to someone that works there right now.
Isn't
it mysterious that it's
from what I understand, it's at a significantly reduced capacity.
But there is people working there as we speak.
Yeah, because there was a whole kerfuffle about them selling spodumene at a far below market rate so that they, didn't have to pay the full royalty for lithium spodumene exports.
It's like a bit of a CIA operation.
Yeah, so the article read really interestingly. You get the impression, and it was kind of explicitly stated in certain parts, that Glencore weren't getting any traction. So you could kind of infer that somebody from the bidding side had perhaps leaked some documentation because they weren't getting traction with the administrators. That's McGrath Nickel. So the article stated that they would go in, they'd buy the debt, and then once all was said and done, there'd be 15% equity owners in the company. And that sort of implies that the previous equity holders wouldn't be completely wiped out, which would be music to the ears of the brokers who are paying legal bills at the moment to, kind of ensure that their legal bills aren't spent in vain, and that they do maintain some equity ownership. And then yesterday we got another update. So the headline for this one was Alita's Bald Hill will be sold to an unnamed buyer, says administrator. So what they outlined is that the company would be placed into liquidation, and then that would allow the administrator to enter an agreement to sell the assets to a secret bidder, which is kind of weird.
And this came out, so McGrath Nichols is the receiver who posted this.
And they're not a nickel company. It's NICOL, because when you first told me, I'm like, who's the nickel mob that's buying? That's putting lithium into them.
Hopefully you never have to deal with an administrator or receivers and managers. They're the people you don't want to have to talk to.
Yeah. So some people might be wondering what's the sort of difference between an administrator and a liquidator. Essentially, when an administrator has a hold of the company, they're still trying to run it and get it going. It's got some sort of protections around it, whereas the goal of a liquidator is to close the company and sell the assets. So
there's also another role, and that's one of receivers and managers. So
yeah,
we'll have to pull that apart at some stage.
Yeah, plenty of other intricacies in and around it, but as those sort of titles relate to what's going on at the moment, that's the sort of definitions. So the administrator said in this case that the identity of the bidder will remain confidential until closing, but they explicitly state that it's not the consortium made up of Glencore and Sagex. So they also say it's a completely unrelated party, which is kind of relevant because you've seen Ostroid and, related parties, directors in common try and bid, and that's what FIRB rejected when we first spoke about it a month or so ago. So after hearing all of this, my question is, why would McGrath Nickel not run an auction process to get the most amount of value as possible? There's clearly plenty of people who are interested in buying the asset. It is, granted a bizarre situation in which a company and the value of a company goes up massively after going into administration. That is a very unusual case, but it's just going to be fascinating to see who the bidder is and what price is paid, and hence if the previous equity holders would get any return.
It's worth looking at this one with curious eyes, I think, JD. I mean, when that article in The Australian came out, it was a bit odd for a lot of reasons. The headline, Glencore bids for lithium mine Alita. It was sort of like, whenever you see something like this, you always question, well, who leaked this and what was their intention? And one theory you could have is like, would Glencore have any incentive to leak this line of thinking because they felt like they weren't getting let in to look at the process? So I wonder, and then you get this announcement that a deal's done, but the bidder is unnamed. It does pose the question: what sort of process has been run to maximise value for creditors, and if there is some residual claim for also for equity, I know equity holders think that they have some claim to it as well. So it poses the question about the process here. I'm curious to get more information and really find out how things have unfolded here and who this bidder is and what sort of process has been run by McGrath Nickel.
Did the documentation sort of incline that the deal was done?
It did, yeah. Which is fascinating. I couldn't agree more with what you said there, Trav. So, Maddie, I've got one for you. Now, you love prediction, and I think this one will be good fun because we shouldn't have to wait too long for the outcome. We should find out fairly soon what the outcome is. The question is, who is the mysterious bidder?
Well, bidder, so it didn't say bidders, so you could say one party.
Yeah, that's an interesting take. Are you implying it could be a JV type?
Well, if it was maybe the bidders would be bid as a JV and they'd be still known as a bidder. So
I think it could
be still. So look, who's in the area that sparks to mind? You've got
no one's in trading halt, by the way. So it can't be an ASX co.
Can't be an ASX co.
No, they'd announce it. I'd imagine it'd be
Oh, so that because you got technically Wesfarmers would go into a trading halt, but SQM mightn't unless SQM were one of them.
Wesfarmers might not if the ultimate acquisition price is sort of deemed immaterial relative to the existing value. Then they wouldn't have to.
So I guess that brings in Wesfarmers, SQM as a possible.
Yeah.
Like Min, would be material for MinRes? Maybe on the
it would have to be.
Yeah.
They're talking about spinning this thing out into a $1.8 billion company, Like the other
Is
natural
that
guess.
only but if the company deems it material
There's
themselves?
some threshold test, I believe. I think
Yeah.
it's about 5%, but I can't remember.
As in the value of the transaction to your market cap?
Yeah.
Or EV or something?
About that, yeah.
Yeah, right.
The other natural guess would have been Allchem, who we discussed earlier in the week picking up tenements in and around Bald Hill. So
Albemarle.
yeah, I mean, could be. They're busy in WA.
Yeah, I suppose because Albemarle were, even though they're downstream, they were still going for Liontown by themselves. So they've a track record of putting in a bid. So pretty much it could be fucking anyone. Sort of got so pretty much if we have to get it right from this list. So you got West Farmers, SQM, you got MinRes, you got Allchem, you've got Albemarle. Oh geez, would you throw developing as a bloody specky?
Yeah. Yeah,
But then that'd be in a trading hole because definitely material to them.
whoever it is, I'm just keen to find out, keen to learn more. There's a lot happening in that area. A lot of companies want to have a bit of a say in what's going on in that region. And hopefully the administrators have maximised potential value on the table.
We've got some more news from one of our favourite companies, Sayona. So this bit of news.
The way you say it.
So we found out that the interim CEO, James Brown, who was previously the non-exec director, became interim CEO when Brett Lynch stepped down with immediate effect earlier in the week. He's actually got another job, so we didn't mention it at the time, but he is the MD at Morella. We're not talking about 5-inch here. It's nothing to do with 5-inch. So, yeah, it's interesting. It's very Elon Musk-like of him to take on multiple managing director / CEO type roles, and we just hope he can manage that workload. The company, Morella that is, put out an update saying that his work at Sayona won't impact his work at Morella.
Well, I was talking to a very reputable person in the finance industry, research analyst, about the Sayona thing. Probably provided a different perspective for me, and I guess you boys might be able to dial in on this one. It's about the Sayona, the big drop after Brett Lynch resigned for personal reasons. Look, what's it say about the company? His view was, look, it is limited to the boardroom, and from the discussions with Piedmont and as well, ramp up was going good, and it sort of opened up the opportunity for maybe consolidation of Piedmont and Sayona to get rid of that horrendous offtake that is in place from Sayona to Piedmont. What do you boys think of that? What's your take? It's a different perspective than how you presented it the other day.
So you go, Trev.
I'd push back on the consolidation rationale because it's a horrendous offtake for Sayona for the benefit of Piedmont. They get to buy their concentrate for an upper bound of $900 a tonne. That's great for them. Why would you want to experience more of the cost by consolidating?
Yeah, there'd be a bit of value destruction.
Yeah.
I guess in there. It was also interesting
for Piedmont.
Yeah, and they had put out an update which gave us a bit more colour, which we can get into at some point, on how the offtake and all that's going earlier this week.
So it wasn't all doom and gloom anyway. All pending ramp up.
Yeah. Well, that's the other bit, right? Not all. I wouldn't say this sort of thing is limited to boardroom when you've got the overhang of successful ramp up, which is like people are still waiting to find out how's ramp up really going. So I'd say limited to the boardroom, that'd be a valid perspective if you had, consistent cash flows and it was some temporary issue. But this is one where you don't know what the long-term cash flows are going to be because ramp up is still ambiguous.
Yeah. Yep.
Matty, you've done a bit of a deep dive on the AuTECO transaction.
Yeah, so AuTECO, they've been sitting dormant for a while. They had the big rise a few years ago when North American gold was the thing.
Yep, they had the Pickle Crow asset up there.
Yeah, much to many companies' demise. 2.8 million ounce high-grade inferred resource in Ontario. They've just been subject to the share market dynamics of junior gold explorers getting absolutely hammered. So they were up to 20 cents and then crept all the way back down to 2. So they're acquiring the Green Bay Copper Gold Project in Newfoundland, Canada. So pretty much the bloody far northeast of Canada, far east.
Yep.
So 39 million tonne resource at 1.8% copper and 0.5 gram per tonne gold. So diversifying away slightly from their being gold producers, and we go. And you'd know by the board and management. You've got Steve Parsons, Michael Naylor, Ray Shorrocks, it's all the Bellevue team were on as non-executive directors, and there's a few board changes that we'll go through. So look, $50 million they're paying for it, $35 million in cash up front, and 15 million shares, but then they have to pay another $7.5 million cash in 18 months and another 7.5 million shares in 18 months. So $65 million consideration. And this company, Rambler, went into administration at the start of the year, or the Canadian version of liquidation. They applied for creditor protection because I think one thread I looked at, they didn't pay an $800,000 bill, and pretty much that was it. Filed for the liquidation bankruptcy over there.
So they were flagging, I think, 7,000 tonnes of copper to be produced in, I believe, 2022, but obviously things didn't work out so well for them. Yeah,
and we'll go through why. So first thing, we'll get into the weeds about what this mine is and what it looks like. But I guess to be clear, because I'll probably go get a bit undergroundy and everything, and like I guess Patriot was a good example where we're looking at all the mining practicalities and of it, but look, it's all bloody 10, 12 years away. This is an exploration company, and they've specifically said that in the investor call. Like they're saying, we don't have plans to turn it on. We want to find value via the drill bit. So yeah,
that's the right message when you've had the myriad of production, Australian companies go to North America, try mine and not have success.
Yeah, well, it's the same as what Silver Lake have taken that approach with Sugar Zone now.
Yeah, correct.
It's like turning it off, we're drilling out to find express. Yeah, but the reason I like to go into the underground mining practicalities because you can just never, besides the share price appreciation, you can't get any cash flow from exploration unless you own a fucking drilling company. You need to mine it. It needs to be mined at some point. So you can't just explore forever.
And that said, the company does flag that they have picked up $250 million in existing infrastructure. So that includes a processing plant. There's the development. There's a shaft there.
Well, there's the decline's down to 950 metres, and it said it needs to be dewatered, but they said in the investor call it was already dewatered. The processing plant's only 500,000 tonne per annum, like a copper flotation plant. So look, that's for the scale of what we're going to show you. That's probably pretty small. So look, if you got 1.5% through the mill, you'd gross yield 7,500 tonne of copper. So that's probably not going to cut the mustard long term if they do turn this on. But as I said, it's not in the forefront of their mind at the moment. Right, without getting into the weeds about underground mining, I guess, as I said, it's probably irrelevant in this exploration investment case. But look, let's look at what they're planning. So they're planning to drill the fuck out of it for 2 years, chuck in 2 exploration declines, 700 metres each. I think they've got 40,000 metres in this program, and they're planning another 70.
Another 60,000 metres in phase 2.
Oh, yeah. Yep. I guess look at how, I guess, what this costs, and I guess they've allocated it accordingly for phase 1. Like this raising appears to be only for phase 1. So because if you go a 700 metre decline, like at the moment, exploration declines are getting quoted at $12,000 a metre in Australia. They used to be like, God, 5, 6 or 7, but now just because of this price environment, I don't know, I can't speak for what these contract rates would be for Canada, and then that 40,000 metre diamond drilling program, that's you quote about $200, $250 a metre for that. So there's
underground diamond drilling.
Yeah. So there's your 8 mil plus what's that? 700 metres at 12 grand a metre. So that's another 8.5. That's just for the drilling and the decline. Then you've got heating. You got like the extra workers there, like all the infrastructure and everything. So let's look at they've put the old comparison up. So there's a pretty bloody deep mines in Canada. Look at this. So you got the LaRonde, Agnico's LaRonde, Evolution's Red Lake, Glencore's Kidd Creek, and then you've got the Ming mine, which is what AuTECO have bought. Spot the difference, boys.
Oh, I love this slide.
There's not one difference, but there's a couple of significant ones.
They mine bloody deep in Canada.
I love this slide. It's also the angle of the dip.
Yeah, so it's the plunge.
The plunge.
How you refer to that. Yeah, so you look at where they've got the shafts in at Red Lake, and the Glencore ore body is very, very vertical, vertical plunge. It appears from that cross section. They could have who knows.
So
when you're talking about putting shafts, so they've got a shaft at 650 metres. I think AuTECO says it's at 650. We looked at the 2022 presentation from Rambler. They said it was down to 500. So unless they extended it, couldn't see them extending it with no cash, but let's just work on 650. So they're at 950 at the moment. But what happens with plunging ore bodies is to put a long-term shaft in, you quickly move far away from it, and you still have to just keep trucking it up to it because you can't. If you could bend a shaft like a bloody fishing hook, it'd be bloody handy, but it just doesn't work that way.
The shaft works when you're plunging like as vertical as possible.
Yeah,
so that it becomes less useful over time.
Big bulk ore bodies, and you might have you'd have one shaft, and because the deeper they go, the further you get away from it, and you can't to horizontally tram to it on the level to develop that far. It's just not practical.
Yeah. The ore bodies at LaRonde and Kid Creek are much more, amenable to shaft stuff.
So, if you got the shaft at 650, that's 650 metres. You don't have to haul it. I assume that is a hoisting shaft that is still in operation. I didn't get any info on that. So,
is it the first time, Matty, you've seen a mine that's nearly a kilometre deep, sort of marketed as shallow?
Marked as shallow. Yeah. Have a look at it. Yeah.
So for those listening on the audio, the other three mines, one goes to 3,100, one to 2,600, and the other to 3,000 metres. So
I know that LaRonde mine, from what I've heard, geotechnically at that depth is very, very seismic due to the depth. So there's a few of them around. Kerr Addison's another one. I forget, but they go pretty deep there. That's why they've got shafts. So,
and there were a couple changes at a corporate board level, right?
So Steve Parsons is going from non-executive director to managing director. Darren Cook, he'll remain as the CEO, and Michael Naylor is going from non-executive director to executive director. So, and obviously I Google these things because I'm like, what the fuck's the difference between a non-exec and a exec? Pretty much an executive director is part of the day-to-day running of the operation, where a non-executive director is not. Same as a non-executive chairman and an executive chairman.
I'll tell you what question I've got for you that I don't think we'll be able to answer clearly is, why does an exploration company need both an MD and a CEO?
We'll have to ask him that one. Let's break apart the transaction cost. So you touched on it there, Matty.
Yeah, so
50 million total.
They did mention that 35 million in cash and 15 million in shares up front. So that's what this $50 million raise they're doing is for. So that's for the cash component, and then they will do a direct placement for that 15 million worth of shares. But yes, the interesting one when you've got a time-based payment, time-based consideration payment to follow. So $7.5 million cash has to be paid on the 18-month anniversary of completion of the deal, and another $7.5 million shares. So look, the $7.5 million shares could be, correct me if I'm wrong, that's just a direct placement shareholder vote. But to raise that $7.5 million in cash, that requires
new equity raise.
And new equity raise.
Yeah. So one of the terms is that if the shareholders don't approve it, they just have to make the payment in cash.
To your point, Matty, on the script being attractive to the vendor, if that's the narrative, you want to look for escrow in the deal terms. You want to look for the vendor is happy to escrow their shares for 2 years' time, something along those lines. You do a Control F escrow.
And you did, didn't you, Trav?
Comes up with nothing.
Yeah, it would be bizarre for a company in administration.
Yeah.
Couldn't find anything if they were escrowed or we don't know.
I think that's the thing you just have to factor in with this stuff is like, if there's not an escrow, then you're left trying to have to deduce the real intentions of the vendor. And is that more overhang as well?
Yeah. So I guess the question we're posing is, once Rambler get a hold of these $15 million worth of shares, are they going to be an immediate seller to realise the cash?
Yeah, who knows, right? Like, I don't know. Maybe there's reports that it was a hotly contested asset, and the script consideration was an important part of the party who won, because they wanted exposure to the upside. But when that's the narrative, you want to see escrow. It just gives you certainty as a shareholder that you can be alongside them and not having to bid up their stock.
Look, that time-dependent payment in 18 months, they have to pay that not based on production and will be forced to raise new equity for it. So and we'll go through, I guess, where the proceeds are going and how much I think that's going to actually cost to do it.
It's hard to think that there could be any worse time for a gold exploration company to raise money than it is right now. So hopefully it's easier in 12 months' time.
Yeah, well, that's true. And yeah, they might be able to raise it a lot better value than they are.
Copper company, Trav. Sorry.
Copper gold. Right, let's talk about the ore body. So you look at a bit of a cross section we'll bring up here. So they've got this upper VMS zone, which is the thinner and higher grade, and then this lower footwall zone. So that's the bulk area. And you see on the thing here, the decline's gone down significantly further on the upper VMS, the high grade section, hasn't progressed on the lower footwall zone. That lower footwall zones are like lower grade but big tonnages. Any questions on my bloody rant, boys?
No, that was great, mate. There would be a few questions that I'd pose to the company that I'd love to sort of hear. Trav, you touched on it being quite a competitive process. It'd be interesting to...
That's remiss, yeah, I don't know.
It'd be interesting to see, what sort of got them over the line. We could go a bit deeper, I guess, on Rambler and what it was exactly that put them into administration, but it's good to see that these guys have come in. They've got a very different outlook on what they're going to do. They're not going to try and turn it on. And like one of you guys said earlier, it's kind of reminiscent of what a lot of the Aussie companies did, and we'd really want to hear the plan as to what really differentiates them and why they're not going to fall into the same sort of pitfalls that many of the Aussie companies did when they went to Canada. And I think they've got a pretty good plan around that. They're not going to go try and turn it on straight away.
Yeah.
They've got a huge drill program, very sort of similar to what Silver Lake did at Sugar Zone, except they're not going and turning it on, having that 18 months or 2 years of, mediocre performance before, putting it on care and maintenance, saying we're going to put $35 million into the asset itself, develop it, drill it out and everything. So
I'm a bear on just Aussie gold mining in Canada. I just think we don't have a competitive advantage operating there. And so I'm just a perma bear on that, especially when we buy it from the Canadians who went broke mining from it. Like I just don't think that we have a competitive advantage trying to do that.
Yeah. One thing I think the company might say to counter that is that the asset is in itself a sort of option on copper prices, just a good way to sort of play that.
It's very, very dependent on the market getting better because, I suppose where everyone's failed before, especially with a time-dependent asset, the market's actually got worse and they've got to the point they're raising it even lower money just to pay the next milestone payment. So if we're somewhere near the bottom right now for juniors, God, you'd hope we are because it's a bloody shithouse out there for them. You'd hope that the market turns around, they build a resource and then they're raising at a much higher price and nowhere near as dilutive for shareholders.
Getting in at a good time in the cycle.
That's what's killing all these companies at the moment is raising at these bloody 2-year lows. So let's hope that hope they bloody make it work.
That's it, mate.
It's some bloody good stuff. NexGen, boys.
One for the uranium bulls.
Oh.
It sure is. So some people might wonder what we're talking about. NexGen, so they're a Canadian uranium developer. They're progressing the Rook 1 project.
Did you say Canadian uranium?
Uranium?
Did he say? I thought he said Canadian uranium.
We'll have to play it back. So their project is in Saskatchewan, kind of in the middle of Canada, and they've got the Arrow deposit, which is 3.7 million tonnes at 3.1%.
3.1%.
Yeah, so
it's radioactive.
It's massive. They've got their primary listing on the TSX, but they've got a secondary listing on the New York Stock Exchange, as well as CDIs here in Australia on the ASX.
Did Langers mention these in our chat with him?
They did.
Yeah.
He did, yes. So on a fully diluted market, on a fully diluted basis, they've got a market cap of 3.8 billion Canadian. So just massive. The company sort of markets the project as the largest development stage uranium project globally. And I think this sort of checks out, like you said, the guys at Terra know about it. I think a lot of natural resource investors would say that sort of statement is fairly accurate. So
it's been a bit of a mystery to me why this company often gets referred to as literally the best undeveloped project in the world because of its how amazing its grade is relative to the peer group of undeveloped uranium projects. It's just like night and day. But it's been a mystery to me why it's sort of just not in development yet, why it hasn't been picked up by a corporate and it's not in development yet. Is that all related to permitting, JD?
Permitting would be a huge, huge deal. This is a uranium mine. Uranium mines all around the world, well, this is a to-be uranium mine, And uranium assets all around the world have been notoriously hard for a long time to get into development. And as well as that, the uranium market hasn't been in such a sweet spot for the better part of the last decade. So I think that all plays into it. So what the actual news is today, they have come out with an announcement that they've done a deal with Queen's Road Capital as well as Soul Patts to raise US $110 million in an unsecured convertible debenture. So unsecured convertible debenture, that's a bit of a mouthful. The unsecured part just means that there's no collateral backing it, and convertible debenture is, something we'll also call a con note. It means it's a debt instrument that can be turned into equity at a predetermined price. So US 70 million is coming from QRC, who are also actually TSX listed. And by inference, the remainder is coming from Soul Patts. And a funky part of the deal, it's a sort of side transaction, is that Soul Patts are buying 8.7 million shares of NexGen off of QRC. So the notes carry a 9% coupon over 5 years. Also, a sort of another interesting quirk is that 2/3 of the interest is payable in cash and 1/3 is payable in shares, which are issuable at a price that equals the 20-day VWAP. So obviously we touched on it being convertible. The set price is at a 30% premium to the 5-day VWAP. And the last sort of detail around the announcement is that NexGen do have an option to redeem the notes on specific terms in the future. So for a cash position for NexGen, they previously had Canadian 89 million. This US 110 million will get them at a pretty healthy cash balance. And to your point earlier, Trav, permitting is what we're waiting for.
Just reading this, JD, Queen's Road Capital, convertible, undeveloped project. I'm pretty sure we saw them pop up doing a very similar thing with Adriatic.
Adriatic, we did.
Yeah. Yep. It's an interesting one. You were showing me this company the other day, and just you've been monitoring the trades, and you're looking at some anomalous volume, what looked like anomalous volume there, and sort of wondering, like, the share price is going up, there's a bit more activity. So
those CDIs, the Aussie listing has had a bit of a tick up in volume over the past few weeks. It barely used to trade, and that's sort of ticked up. And you've also had sort of good rhetoric come out around the uranium in general, the spot uranium price, and then in and around what permitting could look like and timing of permitting. Maybe people are starting to warm to it.
Hopefully. It's one of those projects you'd love to see come on them.
Yeah, the impact on the uranium market would be, it can't be understated. Beautiful. We've got a couple sponsors to thank as we wrap up the Friday afternoon.
We're about to go have beers with a couple of them too.
Thanks a lot to Terra, Anytime Exploration Services, K-Drill, Top Drill, and JP Search.
I thought I'd just let you do all of them, JD.
Yeah. You had me out to roost there. Thanks a lot, guys.
Beautiful. Cheers, Money Miners. Have a great weekend.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.